I'm Danielle Hale, Chief Economist at Realtor.com. This week, I'll cover the marquee economic indicators, including the jobs report, inflation and growth data, and the Fed meeting. I'll review what they mean for mortgage rates this week and what's ahead. I'll also cover several housing metrics, including the Realtor.com July Housing Trends Report and weekly data, as well as pending home sales, price, and homeownership data. Finally, I'll showcase a finding from our New York City Rental Report that I found surprising. First, for the better part of the year, the economy and labor market have contended with concerns that high interest rates, which are meant to stave off renewed inflation, could usher in a too abrupt slowdown. Today's jobs report showed that hiring generally slowed in the last 3 months, and the unemployment rate edged up in July. But wages also picked up. So the question remains, with ample data evidence for either side of the question. Similarly, we saw a rebound in economic growth in the second quarter, but after a decline in the first quarter, the first half of the year saw a slower rate of economic growth on net. Worries about inflation, which edged higher in June according to the Fed's preferred gauge, prompted the Fed to leave its federal funds rate unchanged at this week's meeting. But the decision was not unanimous. 2 voting members did not support the decision because they would have preferred to cut rates instead. Against this backdrop, mortgage rates edged lower for a second week, but have been remarkably stable this spring and summer. I expect rates to edge somewhat lower later this year, approaching 6.4% by year's end. Looking at July housing data, the national market has cooled modestly as active listings top 1.1 million, but divergent regional trends help explain varied perspectives people have on the market. In the South and West, conditions have led to sometimes sizable double-digit price adjustments since 2022. Meanwhile, several markets in the Midwest and Northeast have similarly sized home price gains in that period. In the Realtor.com Weekly Housing Trends Report, we see little week-to-week change. Price growth remains muted. While active listing growth remains substantial, the rate is slowing as new listings growth moderates. Looking at transactions, pending home sales eased in June despite more abundant inventory, highlighting potential gaps in buyer and seller expectations. Home prices, which increased at a slower pace according to one sales metric, are undoubtedly one of the major sticking points. Amid a challenging home purchase environment, the homeownership rate data dropped to its lowest rate in nearly 6 years in the second quarter, suggesting that more are choosing to rent for now, also nudging rental vacancy rates lower. Finally, despite softness in rents nationwide, rents in New York City continued to increase citywide, a factor that undoubtedly contributed to Mamdani's victory in the Democratic mayoral primary. In an attempt to understand how unaffordable New York is, we calculated the time it would take for rent to become affordable if incomes grew and rents were frozen. The surprising answer, it would take decades. You can find all the details, including full reports and our housing data for download, at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates and Instagram for graphics.